Welcome to the best 30 minutes in finance, the Long Only Podcast with Gerry and Doug. Gerry, how's it going?
Good. How are you doing?
I'm all right.
I'm going to ask that someday, and you're going to say I'm great and fantastic.
I'm going to say fantastic.
Great and fantastic.
No, it's never going to happen.
It's never going to happen. Okay.
No, never.
All right.
But hope springs eternal.
Never know.
We never know.
Things can change.
Things can go your way, as the song from Wilson Phillips says. Got to hold on.
Wilson Phillips?
Yeah.
That is so not Doug. I don't know.
No, it's not.
Where that came from.
Yeah. I agree. It is not Doug. Definitely not.
That is not Doug.
All right, Gerry. Starting topic, state of the market.
Inflection.
I don't know about the rest of the market, but we seem to be at an inflection point. Now, we've bounced back. We've had a bigger inflection point and then retraced. So I think
7 times.
Yeah, exactly.
In the last 2 years.
Yes.
I counted.
But we appear to
it really has stayed in the same range. It's been a big range, but it's been in that range for the most part. Hitting the lower end of that range now for the 7th time, maybe 4 weeks ago, something like that.
To that point, my favorite podcast title that we probably ever had was "This podcast is stuck in a trading range." But
yeah. Well, I do think there's been an inflection point, and not surprisingly, as we had said it all throughout this period, that it would probably take lower interest rates and signs that inflation had abated, and we've gotten that now. Not the lower interest rates part, but certainly the signs that inflation has abated. At least the increase in inflation. Inflation, unfortunately, is always with us, and I have to laugh when people talk about it. Inflation coming down. Well, the growth in inflation is coming down.
Yeah.
We could only hope that inflation actually would go away. But that's kind of baked in the system, unfortunately.
Inflation never goes backwards. It only slows down.
Well, I mean, you have deflation, but that it's short-lived. It's not, and we are dangerously close to creating deflation, which is just as bad. I mean, we don't. Let's characterize what we mean by deflation and inflation. We're talking about the monetary phenomenon of both of those. The normal movement of prices up and down is part of economic activity. It's part of the functioning of an economy. But these monetary phenomena that we've been living through, more pronounced in the last couple of decades. Well, maybe the last 7 decades. Since the dropping of the gold standard, inflation has been a problem. And it always will be until we get back to where we're tying our currency to something real. But that's not going to get back to, we're not going to get to that point anytime soon. So the inflection point, without getting into a big, monetary discussion, is I think is with us. Interestingly, throughout this whole period, if this is the worst that we get from an economic standpoint, we've actually had some pretty decent economic numbers lately, surprisingly. Just goes to show the resilience of economic activity, the resilience of the business community.
Thank you for not saying resiliency.
Well, in the face of what has been a pretty difficult economic environment with inflation doing what it's done over the last few years. So it's a testimony to how businesses react. It's certainly, if this is one more example, history now, it can be put in the history books of the Phillips curve, right? Which is the economic growth causes inflation view of the world, or more people working causes inflation view of the world. It's been once again totally disproven, and yet we still have most policymakers subscribing to that. There has to be there is an ulterior motive, but we won't get into that either. So I think this inflection point, and an important one, we've talked about life after Google. I think they call it now the Magnificent Seven, which would include what? Google, Apple, Microsoft, Amazon,
Meta,
which was Facebook,
and Nvidia.
Nvidia's in there now. Okay, Nvidia, that's 6. So Netflix, maybe. I don't know. I'm not sure exactly what they're putting in there. Have really underperformed, and those. I want to say Amazon, Apple, Microsoft. At least those 7 make up like 30% of the S&P 500. So when people think they're buying the market, quote unquote, by buying an index of the S&P 500, 30% of it is those companies, 7 companies. And you start going down to 25. I mean, it gets to where, it's 50% and more. I think more. We'll get those numbers someday and quote them back. But the point is I've long said you could see the market perform poorly and the rest of the quote unquote market or the rest of companies out there doing quite well. And I think we're starting to see that a little bit. And we've always, I want to say always, but we certainly in recent years have kind of prided ourselves on, avoiding that temptation. You remember we owned some of those companies for years and years and years and years up until
before they were cool.
Before they were cool until a few years ago. 18, 19 was the biggest sales we had of Amazon, Nvidia. Apple was in there. We had sold that earlier, but nonetheless, the idea that innovation is going to happen from these gigantic companies is absurd. They're too big. They can't possibly. I mean, why is Amazon getting into the healthcare business? That's a sign of groping for growth. Not to say that these companies are going away anytime soon. They're not. And Nvidia is particularly has proven to be a very successful company. What we thought would happen with Nvidia has happened. And they likely have more legs to them. But you know what? They have to pay attention. They can't just ignore what's coming up from below. Unfortunately, in the kind of environment we lived in the last 2 decades, coming up from below has been really hard. But eventually, even that starts to get overrun. And I think, is that the inflection that's happening now? I don't know. But it's notable that for the last couple of weeks to a month, the Magnificent Seven is grossly underperformed the typical, non-S&P 500 index company that's out there. Certainly underperformed the bottom rung of the S&P 500. Let's put it that way, which doesn't have all that much impact on the index itself.
Well, my feeling,
which is what could lead you to a long period of time of underperformance from the market in general. Market in general, as defined by S&P 500 or any of the very large cap dominated indices that are out there.
Well, my feelings as to why we've probably hit a slightly more robust inflection point is much more conspiratorial. I just think that the powers that be, whoever they may be, are going to have the wind of the sails at the incumbent party. So I think that probably again the people who make the rules are going to have the wind at the sails at Biden for a nice soft economy for the 2024 election. So that could be wrong, could be right, but that's my feeling on the matter.
That's usually true of every election year. If you go back to the Stock Traders Almanac, the election years have historically been very good years. So it doesn't matter who's in there. It tends to be a good year because of everybody. Incumbency wants to protect itself.
That is definitely true of America.